Oh man, so Bitcoin gets rejected at the $24,000 mark yet again, yet the bears are showing some signs of crumbling. We're going to cover off what my next big trade is and the exact conditions that need to be met for me to enter this big trade. As always, guys, if you're looking for a moon boy, you're absolutely on the wrong channel. In fact, we're starting a movement on this channel to obliterate those moon boys. So we have a term here in the UK called do one. I want you to put a do one moon boys in the comment section if you're fed up of these moon boys who just willy-nilly claim that we're just going to run to 60,000 on Bitcoin in 3 days, right? If you're fed up of them, let's start this movement in the comments. Put do one moon boys. Also tag me on Twitter or in Discord with any stupid things that moon boys say, and we'll react to them on this channel so we can put them on the spot for some of the stuff they're putting out, because they need to be accountable for getting many new people in crypto wrecked on a daily basis. Now let's get to the pragmatic news. We can see Bitcoin here forming this ascending triangle which we've been monitoring, and as you guys know, I'm waiting for this 24k breakout. I'm not running in haste. I didn't get excited on any of these FOMO days. As you guys know, you can track back to all of these videos. And what do I always say? I always say I'll enter a clean long position when we get a break, a daily candle close with good volume, break above the 24k level, that's this yellow level here, followed by a confirmation candle, which means the next day's candle would have to open green as well. That is your textbook entry. I'm also looking that you want to beat the high of this candle here. We spoke about that yesterday, 24,600. In essence, when you look at it in the cold light of day, yesterday was just a bunch of hype which never really got there, right? If you look at the volume candles, you can see we never really got quite high on the volume. I mean, it was getting there, but again, rejected latter part of the day, closing below the 24,000 level, and now following it up with another red day. And you can see the same pattern happened here, right? Wicked above. This day was a great example, right? Wicked above, huge day. Next day was huge as well, but both those days ended up with the bears winning. Same again this day, wicked above, bears ended up strong, and you're seeing the same happen in these days here. So Bitcoin currently down 1%, waiting for equity markets to open up. You can see equity markets are showing a little bit flat. They've had some negative data and some warning outlooks from Nvidia, who are obviously a big player in the Nasdaq. That is naturally going to affect Bitcoin as well. One thing you can notice is that fear and greed index has notched up to 42. Guys, FOMO is real, and you need to understand how to navigate this FOMO without letting it affect your psyche. You can feel it over the last couple of days. I'm telling you guys, I've got this social radar when I can tell when people are ringing me, when people are texting me, when certain people are talking about crypto. You know something is going on, and you know that this fear and greed index is notching up. You can definitely feel like those scores of 10, which we were having, single digits, 8, 9, even the 20s are a long way away, and you can see that we're sitting here at 42. If I put this into perspective, look how quickly we've come back up. This is where we were just weeks ago, literally just weeks ago, and now we're climbing back up to our latest high, 42, matching our previous high of 42. And again, everybody's waiting for this 24k level to break. Now, that doesn't mean just because people are FOMOing in that we can't take this long position. We absolutely can take the long position because the technical setup and the fundamental setup is right, but we have to follow our rules. And the rule is you wait for a clean breakout, you wait for a confirmation trade, and then you can take this up to its technical target up in that 29 region. I will be taking profits before then. I won't just be waiting for a perfect 29, 30k. I will be trimming on the way 27,000, 28,000 a little bit, and letting some ride up to the top. Now, it's really important that we don't sit on the sidelines. I'm personally not comfortable sitting on the sidelines right now. Like I explained to our course member lives yesterday on our live stream, which you can join, ijaz.uk/member as well. We spoke about the fact that you don't want to sit on the sidelines, right? You don't want to just be there saying, I'm not going to participate in this relief rally. At the moment, yes, the evidence suggests it's a relief rally. In other words, we could run up to 30, but there's no evidence that we can head up beyond there. But one thing I do know from experience is relief rallies can merge. They can blend into the next bull run. So if you're sitting on the sidelines thinking, oh wait, this relief rally is going to go to 30, but I'm going to wait for it to come pick me up at 17,600 if it notches back down again, that's not how the market works. If you think the market's going to go up, it's in your best interest, not financial advice, but this is what I personally am doing. It's in my best interest to jump in and be in that position because I want to ride this up towards 30. And then if it may be the case that that relief rally turns into the next bull run, we break through 30 and we keep going, right? We keep grinding higher. Now, the on-chain metrics suggest that I still think there is a little bit of weakness in there. But if the macro economy wants to rally, you're not going to hold Bitcoin back. And that's the key. You've got your CPI data coming out tomorrow. Very important. 8:30 a.m. tomorrow. We will be covering that off together. That is your July reading. The market's expecting CPI to cool off from 9.1 down to 8.7. Again, I just want to repeat, there's going to be a lot of volatility heading up to then. So today could be a crazy day. Don't be surprised if you see yo-yos. We're red right now. We could flip green by the time I post this video, and it can close another color, right? It could be purple for all we know. That is the kind of volatility you get heading into CPI data. So be very, very careful. If you know what you're doing and you want to trade some of that volatility, do so with clever risk management. Only risk what you're willing to lose. Make sure it's a small amount of your trading account size, and your trading account size should be a tiny portion of your HODL account size. And it's very important that you understand the difference. You should have your take profits, you should have your stop losses, and your clever risk management in place. So this data could affect what the expectations are for the interest rate. And we've seen this yo-yo up and down a lot. Yesterday, this was as high as 68%, I think I saw it. No, above 60%, I saw this yesterday, which is showing that the market is yo-yoing between pricing in 50 basis points and pricing in 75 basis points. Remember, the market needs a lower inflation rate. Otherwise, they're going to think the Fed's going to come out with the third 75 basis point interest rate hike in a row, which is truly unprecedented and really aggressive hikes in interest rates. But they have to do it. If inflation's not coming down, they have to do that. And a bad CPI reading tomorrow, coupled with the aggressive non-farm payroll figures we had on Friday, could spell disaster in terms of the Fed having to do 75 basis points again in September. Now, remember, the caveat here, which again we were speaking about yesterday with our course member lives, is this meeting is very far away. It's on September the 21st. So in other words, as long as that CPI figure comes in at some sort of number which the markets can shrug off, I think we've got permission for a relief rally. Now, it could ultimately end up that by the time you get closer to September the 21st, the markets can dump again. But I see a green grass here between the 9th of August, where we're at today, up to the September the 21st. As long as CPI comes in at something the markets can bear, like 9, 8.8, 8.9, these kind of figures, I think the market will have permission to go for a run and enjoy a little bit of that relief rally. Now, important, go watch my video from yesterday. I reveal a bunch of on-chain metrics. This is just one of the charts I shared in there, showing what large whales are doing right now in this market. Not whales, sorry, long-term holders are doing in this market. Really, really important. These are people who are holding long-term. They are distributing. Over the last 21 days, they have been selling more than they have been accumulating, which is very, very interesting. So make sure you go watch my video, which I'm going to link up, which will give you the insights on what is going on and whether we should be worried about this, because this is an interesting piece of data which we need to understand if we're holding and investing long-term in the crypto market. Also, switching over to the 5-minute, I do want to share something with you on a shorter time frame for those of you who are trading. We were trying to form this bullish continuation pattern, but you can see we're getting this breakdown now from this pattern. I would keep a close eye on this. If we do not manage to hold this pattern, then we could be heading to lower price points, back down to 23 ranges in this period, or this cluster here. Okay, now if we can get a bounce from here, that's quite good, because then you're still in your bullish continuation pattern, and this is what could break you through the 24,000 mark here on the daily chart. But at the moment, not looking great here. Bitcoin down 1.3%. All coins are tumbling following it. I mean, Ethereum are down 2%. Obviously, Ethereum ran very fast yesterday. Phantom down 2.8%. Cosmos Atom down 2.7%. Near Protocol down 3.35%. You're seeing that coins that ran more are naturally going to fall a little bit faster to the downside. I do want to show you this as well, which is our 4-hourly chart. And you guys know we've been monitoring this exact kind of shape up over the last couple of weeks here. Big consolidation and breakout, consolidation, breakout, consolidation, breakout. We're still on the way to our breakout, right? This price target takes you up to 27,000, which has a lot of confluence with the targets I was sharing with you from the ascending triangle pattern we looked at when we started this video. But again, we're seeing that weakness. I mean, if we zoom in and you can see this latest 4-hourly candle, we really are seeing some weakness. So we need some support to come in around this level for us to bounce and continue to carry on this breakout from this pattern. If you were to draw your trend line connecting all these dots here, the parabola, you can see that this will start to come test that level very shortly. So we need to hold that higher high, and we need to go post that higher low, sorry, and we need to go post that higher high. And that's unfortunately what we've not been able to do on this little move here. We weren't able to post that higher high, which is a little bit of a weakness. Now, if we look at a coin like Phantom, for instance, Phantom was able to yesterday post its higher high, right? So you can see how certain altcoins, that's a higher high versus that. So showing a little bit more strength than Bitcoin. But ultimately, if Bitcoin isn't able to produce that higher high, we're not going to be able to break through that 24,000 mark. And then I'm getting worried, because then I'm thinking, okay, does that mean we want to come back to this trend line line to pick up some support at 22.5, or are we going to lose that and start heading back into our channel? That's ultimately what continues to remain on my mind here to the downside. So there you have it, guys. That is the exact trade I'm waiting for. I want that clean breakout of 24, and I'll be patient. I've been patient for many weeks here, and many moon boys will be jumping into the market, taking trades on an hourly time basis, and just getting wrecked. But the reality is, you've got to wait. You've got to follow your rules. You need to put them on post-it notes. Any serious trader, that's how they would do it. They put it on their post-it notes, they detach their emotions, and they trade methodically. For your long-term portfolio, I'm all in. I've explained that in my video. You can go on my channel, you can search for the video where it says I'm all in. I'm in the market, and I'm happy with my position in the market. Naturally, when the market starts climbing, you always wish you had more, but that's just normal. In every bear market, you wish you accumulated more, and in the bull market, you just get extra greedy. So these are the psychology pieces we need to manage. That's just part of parcel of investing in crypto. Guys, if you're trading during this volatile period, be very, very careful. Don't forget to smash up the like button and subscribe. Go watch my video here on what long-term holders are doing, and I'll see you in the next one.